Devin Choksi, good afternoon, sir. I thought you were traveling.
Yes, Nikunj, good afternoon. Tell me.
You've gone on a holiday and look at what has happened to Adani group of stocks.
I know, I know. I think things have actually started working a little better, and again, I think market punctured the entire rally. Anyway,
Do you think there is value in these stocks? If you think there is value in this stock, why?
I think the more fundamental viewpoint out here that each of the assets, be it the power generating, power transmission assets, or renewable assets, or for that matter, road infrastructure assets, or airport infrastructure, or data center infrastructure assets, each of these assets are basically generating cash for the companies under which they are operating, and it is at a group as a whole. If I look at the summarized view of the group, financial year 25-26, 85,000 crore kind of an EBITDA, on which 20% kind of a growth is being seen over next 2 years, 3 years time. So frankly, I think these assets are cash generating assets, against which I think the total debt of the group, if one looks at 2,40,000 crores, I guess I think this is easily met, I think, through the cash generation that the group is making. So from a perspective of looking at margin of safety, I don't think that I think there is as much risk involved in this particular assets. Yes, one could argue that what if they don't get the growth capital? But that is a speculation that one would not like to enter into till the point of time allegation is proved against them. So from that perspective, I would like to give a benefit of doubt to the group, wherein we believe that I think the current financials of the group, they suggest that I think the valuation wise, the margin of safety comfort is much more higher than it was ever before.
So what would you buy? Adani Port, where cash flows are predictable. Adani Green, which has fallen because of the controversy, because one is safe and other one is hit by news.
Yeah, I think if Adani Green probably has fallen, maybe I think it's more because of the nervousness. It's more because of I think the issues pertaining to I think they're getting the future funding for the business. In my viewpoint, as I believe that I think the at this point of time, I think one should not be getting too much into that speculation. And if at all, I think one wants to basically get some affirmation. I believe that I think there are so many companies which have been charged for a similar kind of a cause in the global market, be it in USA or be it in Europe. I think they continue to remain leaders in their business. They continue to be in business. So I think probably India is experiencing this particular situation for the first time. And that's where I think some amount of nervousness definitely is justified. I agree. But at the same time, I think nothing is closed chapter. I guess I think the investors will soon discover that I think the allegation, even if it is proved, then also I think there is a business situation to run this entire operation. So I think one should not be getting into any kind of conclusion at this hour as I see it.
Kunal are also ready. Naresh, a monster comeback from Thursday's low and a solid consolidation this afternoon. Is everything going as per the script?
Yeah, so what we are seeing is the initial 2 days was the Nifty taking the lead, and today, after that, heavyweights taking a lead, it is mid caps and small caps. So if you look at it, we are up 0.5 to 0.8% on the mid cap, small cap indices, even though the Nifty is flat for the day. So overall, the bias remains we go towards that 24,500, 600 mark and then review whether we see a breakout in the banking space. So would be watching out for price points 24,500 on the bank on the Nifty and 52,500 on the bank Nifty. So that remains the resistance. But the bounce is going as on expected lines, and it remains a buy on dips closer to 24,100 odd levels on the Nifty.
Kunal, as per the script, big comeback, you make a base and then climb up again.
Yeah, I couldn't have asked for more, Nikunj, frankly, especially after 8 weeks of consistent price selling, yesterday's FI numbers, today's consolidation, pick up in large cap names, and I think that's the interesting bit of the market today, because you've seen many of the large cap stocks in the last many weeks have seen starts, but those starts have not resulted into any kind of a major follow through up move. But today seems to be one of the days where you're seeing very mild pullbacks on the indices, very mild pullbacks on the few names which have rallied up in the last couple of days. But then there are new breakout candidates. So I was looking at the list of stocks which are trading now above their 200 moving averages. For example, last week or so, midweek, we were discussing this point that almost 85 to 90% of the stocks in the mid cap 50, small cap 50, and few of the indices like the Nifty 50, I think had seen almost 85 to 90% of the stocks below their 50 and their 100 moving averages. That number has reduced substantially, and now we are at a point where almost 50% of the stocks are just about trading below those averages. So it's been a very good recovery for the indices, and till the time these numbers keep on improving for the overall market, the texture of the markets would remain positive, and these mild consolidations should be taken as a buying opportunity.
So are we in for a good December? What we call is that the Santa rally, some like to call it a Christmas rally. Are we in for a big one?
Yeah, it looks like. I think the start of the December series should be on a positive note. Yesterday was one of the first days which we saw the rollover data, and it's very encouraging because almost 12 lakh contracts were unwound for the Bank Nifty for the current series, but just 1 lakh was transferred to the next series, which means that there was a net reduction of almost 10 to 11 lakhs in terms of OI. So that means that the extent of short covering which has happened to the banking index is playing effect, and we've seen historically that whenever the indices going to an expiry week after 7-8 weeks of price correction and with a change of stance from the traders, it has a strong effect going into the fresh series.
Okay, fair enough. That's the word coming in on the Nifty Bank. Meantime, just checking in on some interesting volume buzzers in trade. Some on the back of news. You've got a Vodafone Idea, of course, that's active in trade today. It's been positive news and thereabouts double-digit gains, 8.5% nearly. There's Yes Bank as well. That's another volume buzzer. So that stock too is holding out. Within the FMCG basket, check in on a Colgate Palmolive. Don't flag that one off as a volume gainer too often, but this one makes it to the list. Pretty strong volumes is what you're seeing. Macrotech developers, the entire real estate basket is holding out, but this one particularly stands out in terms of volumes. And then there's a Bajaj Auto as well that's seeing pretty strong traction on the volume side. A quick check in then, Naresh, from you. Any of these stocks that are looking interesting?
So Bajaj Auto is something which I would be watching out for, given that the stock has corrected a lot and come back to the same prices where it was back in March, April, which is where it started a fresh move from. So closer to that 9,000 mark is an interesting place, 9,000 to 8,800, where one could look out for a buying opportunity for a bounce back to 10,000 odd levels.
Newsmaker, of course, is Zomato. They've raised 8,500 crore. The stock bottomed out when the funds were selling stocks worth 8,000 crore. So Devan bhai, the stock bottomed out when the same funds who participated sold Zomato, and today they are buying fresh QIP worth 8,500 crore. And typically when a stock moves into FNO, when it moves into the index and when supply comes in, the stock tends to peak out. So do you think in the near term we have a glass ceiling in for Zomato and it will take some time before it cracks it?
Yeah, well, I believe that I think on a total market cap in above, I think 2,50,000 crores, I think the company has been producing annualized profit of around 1,500 crores, then a little above. Even if one assumes that I think they keep producing this growth in profit at about 100%, given the kind of strength of business model that they have, still you are basically paying a significantly large amount of premium to buy an asset which is going to give you a larger amount of, I think, the visibility about the business. Agreed that they are in a growth oriented business, consumer tech is very powerful out there, but at the same time, I think the valuation at which I think they are trading currently, probably in my mind, I think everything is fully priced into this particular valuation. So unless we get some corrective downside in the market which is significant and protects our downside on the lens margin of safety, probably not immediately convincing to buy the assets, I think, at a significantly large premium, which is what at Zomato currently trading at.
Okay, that's the take coming in. Meantime, Devin, what's the outlook on where you stand when it comes to real estate? Stocks like Macrotech are buzzing away in trade. With this election, we're also talking about a lot of focus on execution and momentum picking up when it comes to project wins. How are you reading into real estate?
Well, again, I think there is no doubt about the growth in the real estate space, and particularly the premium real estate or housing is something which is going to be in demand given the strength of the wealth that we are now experiencing, particularly in the larger metros like Mumbai. And that's where probably some of the premium developers are stationed at. I believe that I think they will continue to enjoy the kind of a growth in the business going forward. At least the current visibility is between 3 to 5 years for most of these developers. So from that perspective, no questions, or that it's not denied that I think these companies are going to see a larger growth. Whether the valuation is attractive enough, maybe answer is no. Maybe everything is priced in at this point of time. Answer is yes. Probably, I think one would like to buy when the market gives you a sharp correction on a given day. If at all it happens, that would be, I think, a better time and opportunity to add some of the good quality real estate names in the portfolio.
We are up marginally from the day's low. Again, that's what you want to see. You want markets to go higher, make a base, stay there, go up and down, and then recover as things close. Nuresh, this is like they say textbook stuff, right?
So classical in that sense, we've recovered sharply and we'll take a pause for a few sessions, paid off the move, the gap gets tested. So we have a gap around that 23,000, 24,000 odd levels to 24,130. So testing that today also, we made a low exactly around those area. So in that sense, we consolidate here and then look at 24,500. And if we sustain about 24,500, 600, it gets into the first indication of a stronger bounce, because that would imply the recent swing high has been taken out. So for now, expecting this to continue, but stock specific action could get better and better over the next few sessions.
Okay, meantime, the entire defense basket, as well as on JP Morgan's radar, they've initiated an overweight on BEL. Hindustan Aeronautics is a stock that they like. They're also talking about Mazgaon Dock with a target price at 42.48, saying that there's a long runway for structural growth and that the recent correction as well that we've seen in the stock price is an opportunity. Which would be your preferred pick, Deven, when it comes to defense?
Well, we continue to like the underlying story in each of the companies which are talking about, and whether it is BEL or BML, I think the individual verticals and the defense definitely, I think, remains a very strong proposition. Whether you are getting enough amount of comfort again with the valuation, answer is no. Largely because of the fact that I think these companies would have a gradual delivery against the order book that they have. It's not going to be an exponential kind of a delivery solutions that I think these companies produced. So from that perspective, if I think the 20% kind of a CAGR growth over next 3 years is assured, then probably I think the valuations around 30, 35 times price earning would be, I think, a comfortable valuation. Anything over and above that, I would think that I think would be an expensive valuation to buy into the portfolio. So I think definitely initial correction which happened in the last month and the current month beginning in some of the defense names, they gave a good amount of clarity that yes, I think if they do come down, it's a buy opportunity. If they firm up again, I think one will have to wait before buying into the portfolio.
Okay. Devin, which is one stock which you think has been unnecessarily punished because of liquidity? The fundamentals are not that bad. It's falling because FIs are selling.
Not too sure about, I think, the names that I would like to put across, but I believe in general some of the some of the rich valued stocks, I think in the mid cap and the small caps, I think they have been significantly punished. Whether I think they are justified for that particular thing, I'm not too sure, because I think individual names we are not talking at this point of time. Um, in the large cap space, yes, I think the likes of Reliance probably I think has been punished, I think, much more than what probably I think is the business and the valuation of the company is. In my viewpoint, I think maybe due to some sharp exit of some of the large investors, the company like Reliance has corrected significantly. It becomes an opportunity. I think this kind of corrections definitely becomes an opportunity, as also one has seen in yesterday's trading. I think the good amount of buying has also happened on that counter. So similarly, there are certain banking stocks, some of the NBFC stocks like Bajaj Finance or Bajaj Finserv, who remain, I think, relatively stronger on the execution side of the business. They are probably, I think, down because of other reasons. So in my viewpoint, I think they pose or they give an opportunity at current levels to buy them into the portfolios.
Devin, where is Jio Financial's headed? You know, it had really made a stunning debut, went without on hopes and on assumptions that it could be a grand start to Jio Financial Services business, but they've not really done too much in terms of getting business activity rolling. Where is Jio Financial Services headed?
So I think the vertical wise, if you look at, I think each of the four verticals in Jio Financial Services, I think they look definitely clear cut as far as I think the execution is concerned. On one side, NBFC vertical, asset management vertical with the BlackRock, even the distribution of wealth products, including the brokerage platform with BlackRock, and insurance vertical where they are looking at some tie-ups of the partners. They are all probably, I think, getting ready. On one side, you have the balance sheet size, which is strong enough in starting the lending business. On other side, you have technology platform in the reach to customers, I think, which can possibly, I think, help you in starting the business at a faster pace. Maybe as the style of Reliance is, I think they build the infrastructure very systematically. After which, I think they roll out the model, and in subsequent period of which, after which they rolled out, probably the numbers taken, and that's what one has experienced in case of Geo platform. Similar situation is expected to happen in case of Geo Finance, wherein I think one after another business are getting rolled out with the use of the fintech at the front, and I think a strong balance sheet at the back. Probably, I think they would be in a far better position to talk about as far as the number is concerned in due course of time in subsequent quarters.
Okay, meantime, let's just get in some chart checks as well. And Kunal, what's your reading on something like a Granules India on the charts? Have you had a look at Biocon as well?
Yeah, Biocon is something which I have been tracking regularly. The stock, it looks attractive. So I think after that result-based move, the stock moved towards 340-50 levels. Then from there, it corrected back towards 325, 330 mark. And now it's back again to those 350 levels as a breakout. So which means that this corrective move of 20 odd rupees is completed for Biocon, and the stock is getting ready for a breakout yet again on the upside. So I think on the upside, we could be looking at least a 20 to 40 pointer move for Biocon from this 350 levels. So which means 370 to 390 could be a potential breakout point for, or the upside target for Biocon over the very short term. Granules on the other hand is also, I think, trying to look very inch back towards a breakout. It's looking attractive on the charts because there was a false breakdown for the stock. So in the last 2-3 months, the stock had retested levels of 540, 530 3 or 4 times, and in the fourth attempt, the stock had broken below those 540 levels. But it was just for a matter of couple of days, and the stock has managed to make a comeback again. So which means that we could now be looking at the stock gaining a lot of momentum over here. So I think closer to 600 would look out for targets in the range of 640 for Granules.
All right. Meantime, Deven, wonder if you've been tracking what's going on in the quick commerce space. UBS's latest report talks about how Swiggy has a bit of an edge and it's well positioned for growth, given that it's at a 35% discount to Zomato. What's your take on the listed players?
See, I think about the quick commerce space, I think we like the entire proposition because the way in which they are executing, they are also factoring in significantly large amount of customers and the volume into their side. So I think whether you take Zomato's model or you take Swiggy's model, I think both these models have some niche to talk about for sure. The question here is, and as I explained earlier in the case of explaining Zomato, I think the question is the valuations. The market has probably priced in everything at this point of time, including the possibility of charging the user fee by the Swiggy's and the Zomatos, and that to at a higher proportion level. Probably everything is getting priced in, and the valuations are really remaining, I think, at an elevated point. So that is a concern. I think unless you have a safety margin of safety on the downside, probably I think you are not easy to buy this kind of company. One is not easy to buy this company into the portfolio for a reason that I think it might give a prolonged underperformance if at all certain conditions are not met. So that's why we are a little bit more careful, want to buy with the margin of safety and not otherwise.
Deven, going to let you go on that note. Thanks so much for taking time out and joining in and sharing with us your take on the market.
If you like this video, then like, share and subscribe to ET Now.